All right. Good morning, everyone. I think we are good to go here. Yeah, welcome once again. We're back in our Wednesday morning event series. I'm your host today, Ian Gardner. We've had a couple of weeks off, so it is great to be back and back on Zoom. For those that got used to hop in, then we are back on the regular platform. Yeah, as I say, I'm Ian Gardner. I'm a co-founder here at Innovation Bay. I'm also a VC and investment partner with Gelix Ventures. Also, big thank you to and call out to the Innovation Bay team. We've got Faden Stow, who's my co-founder in Hobart, and then not quite all in Sydney, but Claire is in Sydney, Sam's in Melbourne, CJ's in Byron, and Alison is in Sydney. Yeah, and we're all here to support and connect the startup community across Australia. If you're new here, and I know there's a few of you that are, then Innovation Bay is the longest running community for founders and investors across Australia. Our mission is to support founders on their journey from idea to IPO and beyond. And we do this through a bunch of events, programs, and other content like this, all designed to enable people to connect, learn, and grow. Huge thank you, as ever, to our fabulous sponsors. So AWS, IAG, Farmark Ventures, Macquarie Bank, and KPMG High Growth Ventures. We love them. We love what they do. We love their support of us and the whole startup ecosystem. So we couldn't do this without them. So massive thank you to them. All right, so today, we thought we'd discuss the cold email. So whether you're a founder that's trying to get attention from someone, specifically today we're going to be talking about to investors. It's quite hard. So how do you do it? So we've asked three of our favorite investors, or three of the most amazing. It's not just because they're our favorite, but they're also really good investors, to review your cold email introduction. Now this is live. So the panel has actually seen these pitches yesterday, but the audience has not. So we want to find out what their first impressions are, what you as a founder should avoid mentioning, or you should mention or focus on. How are you going to demonstrate your passion? How are you going to structure your pitch deck to engage with them at this stage? Call out to the audience. If you have questions, please do ask them. There's a Q&A function down below. There's also the chat room running, so feel free to jump in and do that. Now, I'll stop my slides for a sec, just while we meet the panel, and then we'll come back to it. So let me just do a quick intro to this wonderful panel. So Sam Wong is a partner at Blackbird Ventures, coming to us all the way from New Zealand. She's in Auckland. Blackbird, I'm sure you all know, but it's a technology venture capital fund, and Sam is leading Blackbird's New Zealand fund, and it's focused on supercharging New Zealand's most ambitious founders. So welcome, Sam. It's great to have you. Dean Dorrell, welcome along, an Englishman, now in Australia, co-founded Carthona Capital back in 2014. Dean and I actually met about then when our kids were playing under-8s cricket together. If you listen to the podcast we did, we probably spent half of it talking about that and other non-venture related activities, so that's probably quite good. Carthona is great. It's become one of Australia's leading early stage venture capital companies, invests globally, great success, a few exits. Yeah, Dean's an awesome guy, so welcome, Dean. Matt Allen, so Meta, as most people know him, all the way from Melbourne. So I'm glad you're out of lockdown, mate. Ex-software developer, ex-technical co-founder, ex-tech recruiter, ex-business development manager, ex-colleague of mine. We worked together in the AWS startup team for a few years, which was a lot of fun, if you remember. Seems like a while ago, Matt, but that was great. You're now an investor, advisor, and board member. You like VC, but you also love founders building solid, enduring tech companies. So you've got a bit of a twist in VC and getting more into sort of debt finance, but maybe talk about that as we get into it, because you believe that not all ambitious founders need venture capital to succeed, which I actually agree with you on as well. So welcome to our fabulous panel. Great to have you. All right, so look, we did get a lot of submissions for this. We all receive a lot of cold emails. We have selected 3 of them, and we're going to review them live with the audience here. As I say, we want to understand the first impressions, because I don't know about you guys, but we're probably getting at least 1, sometimes 2 a day that come in, and that we don't all in the investment team get to go through them. But you don't have much time to do it because you're busy with everything else, your existing investments, your new investments you're looking at. I mean, what are the first impressions, and what is going to get it from cold email to maybe, you know, share it with the team and then maybe get a meeting. So that's kind of what we want to try and talk about. Look, before we jump into the selected submissions, I do want to have a quick chat with the panel, just try and get a bit of context to this. So maybe two questions. In fact, no, let me just ask them one at a time. So first question, do you or any of your funds accept cold email introductions, or do you prefer a warm introduction to a founder? So Dean, I'll start with you in that one, because I know you have made at least one investment as a result of a cold email. So yeah, tell us about how you think about cold emails.
Thanks, Ian. Hello, everybody. That's right. We do accept cold emails. In fact, we welcome them. And the prime reason for that is that we think that it's not easy to be connected into a bunch of investors. We know that the industry does have a diversity problem, and that if you arrive from overseas, you're not from a typical background certainly of a tech founder, which is largely white and male. But it's not easy to have that network that gives you the warm intro. So we call out on our website to say that we welcome cold emails. It's not to say that that we prefer cold emails. In fact, it's clear that founders have a better chance of getting somewhere with investors, and including us, if they've got a warm email. Yeah. A warm intro, because there's a context and someone can vouch for that person. But we're certainly open to receiving cold emails, and actually we look at every single cold email that comes through the door. Yeah, interesting.
And Sam, I'm sure I've heard Rick talk about this. It's much better to get Rick Baker, that is, it's much better to get a warm email. But any does Blackbird have a policy in this?
We definitely don't have a policy not to look at cold emails. That's the job, right? Is to look at everything that comes your way and review it. I'll just agree with Dean's comments around it's always better to try and get a warm intro. And I want to say as well that warm isn't hot necessarily. It's, you know, maybe tepid or just above cold. Like you could, you know, come across someone at an event. We're all out in the community every week, you know, speaking at things, meeting things, hosting things. You could come along to one of those and email one of us afterwards and say, I really enjoyed that, and you know, got this out of it, and I'd love to, you know, I'm out raising and here's my company. Like the other thing is, you know, obviously StartMate is, you know, a huge community and one where we're very involved with, and between alumni, operators that work in StartMate, mentors in StartMate, that's, you know, a community into the thousands of people, and any of those people could reach out to us on your behalf. So I think I wholeheartedly agree with Dean's comments around diversity, and you never want to create a barrier to people who don't have those connections, but don't overthink how connected, you know, or warm your intro needs to be. It doesn't need to be our best friends, you know, any sort of point of reference will help.
Yeah. Matt, you're recognized, I suppose, as one of the best mentors and connectors out there. So, you know, I suspect you do a lot of warm intros from founders to other investors. I mean, I certainly do. I think most investors pride themselves in trying to do that. But your thoughts on this one? Like, prefer or not?
Yeah, no, look, we do. I mean, our stuff always have our, you know, hello at domain name. You know, it's there and it goes to the whole team. So like it'll get through to someone, whether or not, you know, if someone will read it, whether or not we're actually able to respond and jump onto it is tough. It is not always consistent. I think the definition of cold is kind of what we're talking about. You know, like there's nothing worse than an email that says "Dear Investor," has zero, like, you know, ultimately, you know,
Dear Mr. Investor, that's my favorite.
Dear Mr. Investor, yeah, exactly right. Yeah, Dear Sirs. Dear Sirs is definitely the way to go, straight to Dev Null into the bin. So I think it's a bit of an effort thing, right? Like it's like there's spamming a list, and there's just saying, you know, there's degrees of coldness, you know, and Dear Sirs is probably at the bottom, you know, especially for poor Sam. You know, all of us, in fact, every single one of us on this call has a public profile that we talk about stuff that we like, right? You know, we're all on Twitter. Well, we've all tweet things, right? You know, like it's almost the opposite of, you know, warm is great, but like ice cold is just the worst. but they'll get there. And whether or not you get a response could be, just how cold it is.
Yeah. All right, look, it's 8:10. I mean, we're trying to run to a nice tight ship here, so like maybe we'll skip the second part, because the second part of the question was really around what it should look like. But I think we'll get into that as we start discussing these. Look, this is a bit of a experiment. Sam, before we started the broadcast, Sam said, "Look, I've done pitch deck walkthroughs and Zoom, and they don't really work very well. So we are going to try it. So what we're going to do is share my screen, and then we're going to run through the covering email, and then most of them are about 15 slide or thereabouts pitch decks. And we're going to get some live, some feedback in real time from the whole panel. So why don't we try that? We're going to do 10 minutes on each one and try and keep that fairly tight. And then we're going to go to audience questions for the last 20 minutes and just take some feedback or questions from all of you out there. So let me work out if I kind of stuffed up. I'd forgotten how to run Zoom earlier today, but hopefully I can do it again. Right, how's that? Can you see that? Right, let's jump into the first one. So this is from John Sullivan at Release Energy. I'll just read this. So hi, Mike. I don't know who Mike is, but thanks for connecting EG Cold via LinkedIn. I think the brackets are just some, I would maybe, he would be customizing that for each of us. Congrats on your recent success with success. It'd be great to catch up for a coffee discussion together. I love this one. Maybe near your office, brackets 4.5-star cafe. It's like a 4-star cafe would be no good, if that's convenient, and protects an introduct on Release Energy wind surf turbine. So any who wants to jump in on this?
Yeah, I'll jump in.
Okay.
So like founders that spend some time on Yelp finding a 4.5-star cafe, like that's a little bit of effort put in place. I think a generic statement on cold emails is like, know your audience, like know who you're talking to. So if it was coming to me, I'll just talk about me. I have a little bit of a interest in energy and a little bit of interest in, in a little bit of clean tech, although I don't have any in my portfolio. So, the leading indicators of whether someone's going to invest in your startup is likely that they've got some sort of, especially for people that have a history of investing. Are you on brand? Like, are you talking to someone who actually knows about this stuff? Because if you're a founder, you really do want people that are actually going to lean in and know about the problem you're solving. So on the pro side, I like energy. A windsurf turbine sounds interesting. Like this is not necessarily boring. They're going to come out and see me, which is nice. It keeps things efficient on our side. So I'm likely to read the deck. That's my ruling on this one.
Sam,
Ian,
sorry,
can I jump in? Sorry. Yeah. Firstly, I think we all admire entrepreneurs' hustle. I think we all want to see some early signs of hustle. So for me, I'm looking at this and saying, yeah, I don't know who Mike is, but one of us could have put one of our names on here. But also, it's pretty clear that who the panel was. Or I'm assuming it was clear who the panel was. And I just checked my LinkedIn.
We hadn't announced the panel, I don't think, when they said it. So
right. Okay. So I was just going to say that if that was right, I just checked my LinkedIn to see if someone tried to connect. That would have showed a bit of hustle, right? Ahead of time to say, right, actually, I'm going to connect. But I think all of us see so many pitches that we're trying to find a reason to say yes. But primarily, the first pass is to say no. Yeah. So if we can find elements of the email that go, you're already starting that chain of decisions that say, maybe this isn't for me. So, but I agree with Matter that actually subject matter about actually the theme of the investment is incredibly important.
Yeah.
On two sides. One is that an area that someone will invest in? And for us, this is highly unlikely for us to invest in. We've never done anything like this. But we often get emails from someone where we've invested in a particular company and a business that's starting that is likely to be a very, very keen competitor. Someone sends us their deck out of the blue. So, you know what? Find if someone's going to do a portfolio approach. Is someone going to invest in 5 different companies in a sector? Generally, when you look at the size of funds, you'll work that out. If not, it's probably not. That's not the best person to send it to.
Yeah, All right, we're burning through our available time here. Sam, I don't know whether you got any really quick comments on the email. Do you like it?
Well, I probably wouldn't take it, just because, I mean, really all I've learned in terms of the actual company and the opportunity is that it's in energy and wind turbines, and that's just not something I spend any time thinking about or have ever thought I'd love to invest in. So I would say on a whole, like personally for me, I just think, tell me about the company and why it's a really great opportunity in the intro email. I'd probably still look at the attachment just to double check, but yeah.
All right, well, let's jump into it. Again, we're at 8:16, so I want to try and get this done by 8:20. So this is going to be a quick run through. So first slide, overview, got a picture of the device, a little description.
Yeah, just I would suggest just motor through this, Ian. You know, like as you motor through it, I think there's an interesting thing. You know, the deck you send for someone who has to read it versus the one you're pitching is a really important thing around telling enough of the story, but not too much of the story. You know, like deep, dense data is probably going to and here's the thing for founders to know. Everyone's different. If this landed in some energy analyst's inbox, like they'd probably spend hours on it, right? And Sam would just skim straight across the top and go, yeah, nah. So I think picking that audience is really important. You know, this deck, as far as one to read versus one to be presented, is probably got enough stuff to sort of get someone who's into it to start asking questions. And I think we can all agree that a deck, especially one you send, like if I've got questions, if I'm excited, I've got questions on the back of it, I'm going to reach back out to you.
Yeah.
So there's this fine line between tell me everything versus tell me enough that I'm curious to sort of ask the next question at this particular point.
Yeah, I mean, when I first read through this, I thought it was pretty good. I mean, I got to this one and it's like, okay, this kind of makes sense. Like you see those big wind farms and hills, and then if you, you know, why are there not more turbines? And the reality is that this thing fits in between them. There seems to be a market. There's a nice diagram. You talk about offshore wind. I mean, that diagram that we saw at the start just showed that's where a lot of the potential is. And I think there was an announcement that, in the last couple of weeks that Victoria is going to have this gigantic offshore wind farm off Gippsland. So it's a big potential, and that looks pretty clever. Nice photo of the founder sitting with his turbine. Looks pretty cool.
Inside a building, I was confused and kind of curious.
Yeah, how'd you get it out? Probably won't be that windy in there, but I don't think that's really the point. I don't have the video available, but I'm sure that was.
I reckon it spins. That's my guess.
I think that's right. That's a bit geeky, but shows it working. Active pitch control. And then the team slide. Now, there's not much detail on the team, and I think that's the last slide. So, yeah, so I skipped through that as Matt was talking there. So, any further thoughts on this one? Like, what should have been in, what shouldn't from that pitch deck as the opening one? Was it too geeky?
I think more of a really identifying the problem and sort of a unique solution. I think it took a bit of work to understand when you said, hey, look, yeah, hey, there's an infield. It's like, oh, right, okay, I actually need to understand that. I also think in terms of, does a pitch deck need to look nice? I think it does. I think you're looking for someone's attention to detail, to understanding the game. Here, when I look at the Release Energy logo and a new market for wind on every single slide, there's limited real estate on each slide, right? You don't want to crowd things in. You still want to give the information over. So don't put this, maybe put your logo in a small place after the first slide. Don't put too much information, because people are, they're trying to take this in probably in 5 to 10 minutes. People are not spending an hour on your pitch deck when they've just first seen it. They're going to have a quick skim, understand it. Is it in an area that we're interested in? Is it worth actually digging in a bit more? So yeah. I think it needs to be a bit clearer.
And I think you're being generous. I think 5 to 10 minutes for a cold email like this is a lot. I don't know about you guys, but we don't tend to spend that.
A few minutes max.
So if you get to something like this, you're just not going to read the text in it. I think it's got to be simpler.
I think for me as well with the market, I guess what I was sort of looking for given this is sort of not, straight down the middle sort of thing that we would do or I would do, is like, why does this unlock a new market? Or are you trying to convince a whole bunch of existing wind farms to, transition to your technology, or why is there going to be sort of not a really hard slog go to market with this was something I was trying to understand. And then just on the team slide, yeah, I think your just comment, it just wasn't clear to me why this would be the team to win, why this is their life's work. And particularly for Blackbird, so we need to see an Australia or New Zealand founder connection. And all I could see here was UK related connections and no Australian connections. So that would have been an auto no for me.
And just a quick one, Sam. I mean, like the number of team slides you see, there's just middle-aged white dudes. Does that register?
Yeah, actually we have, it's come up more and more, just because we just know that diverse teams produce better outcomes. We now have enough data in our own portfolio to see that, as well as, the research that's out there. So, it's not the reason we would pass, but,
it's a factor. And can I just also throw, this particular slide deck, hardware, wind turbines, so forth, like, I would even argue whether or not this is a venture investment. Like there's a bunch of other ways that you could fund a company like this. And, if this is early days for them, an actual VC that needs, very large returns very quickly, I'm not sure that this business is even compatible with the financial structure that is venture. So like, there's a little bit of a, that didn't come across, and whether it even needs to come across or whether or not it's just a gate they should have gone through in the first place.
Yeah.
And one last thing, the last slide, which basically says invest. Okay, give me a clue how much you're raising and like what's the price and what's the terms, and you're not going to get much chance. Just that's a complete waste of a slide.
That's such a good point. So I'd forgotten that we're doing a bit of brutal questions. So audience, you will have seen a little survey pop up. Would you take a meeting from this email, and what did you think of the pitch? So it's a brutal world out there for founders. So yes, John, you're going to get some feedback, like it or not. But look, and we should be constructive here as well. I mean, like John and the whole team, thank you for submitting this. None of this is meant to be critical in any way. Like what you're doing is amazing. What any founder is doing is amazing. So, we love the fact that you put yourself out there and allowed us to critique this. So don't take any of this.
Any consolation, we also prepare pitch decks and have them ruthlessly picked apart. So.
Yeah, I'm going through that at the moment. It always feels like that. So, Claire, I'm not sure where we're at with are we going to show the results of that survey? Oh, here we go. Yeah. So 23% yes, 77% no. And it seems kind of average, I suppose, is the thoughts on that. Just a little bit busy, I think, was the punchline on it. Right,
I did think that they explained the product well, though, and I think a real fail is when you flick through the deck but you don't understand the product. Yeah. So I thought they did that well.
And it's tricky. I mean, it's a complicated product with a complicated market, and it's tough to find the balance between over-indexing on the first email and just ignoring it. So, all right, let's jump on to the next one. We are running a little bit behind. So this is from Linda. So again, it's in energy. So hi, name of the investor. So my name is Linda. My team and I are raising funds to develop a platform. I'll actually just let people read it. All right, who wants to jump in on the?
I'll go. I actually quite like this one. I think quite often you'll see sort of presumptive emails, like, hey, about going for a coffee, or I'll call you, or something like that. In fact, founders' time is super valuable. As much as VCs are guarding their time, but founders also don't want to have a coffee with someone that's not interested. So I think this one that says, if it's interesting, then let's go a bit more forward. So I actually think this is, explains the product, is quite succinct, comes across quite warm. I think that's quite well done.
Yeah. Matt, I'm a bit of a grammar Nazi, and just that there's a comma that shouldn't be in that second sentence. So the complexities that customers face, there shouldn't be a comma. That kind of put me off, and maybe it's just me, but I didn't like that one.
And this is we all do pattern matching. I think that pattern's a little granular. I think you might miss some interesting people because they put the comma in the wrong spot. I've been on the receiving end of that comma's not correct email. I'm gonna say two things that were really important here. Spelling out the virtual power plant, then using the acronym. Like, the assumptions you make about the email, the people who are on the other end, is really important. And founders or anybody actually that sends an email that's full of acronyms is making huge assumptions about what I do and don't know. I think our job is to quickly comprehend things, and that's probably what we're good at. However, you've got to sort of take us on the journey, but very quickly. You can't start at the end and assuming everything. So, explaining what the VP powerful, then using the acronym is sort of said to me that, cool, you're kind of taking us on that little quick beginning of the journey with us, which is good. Yeah. And I'm same thing with Dean, is that these are incremental things. The job is not to come over to my house for dinner on the back of an email. It's to get me to read the deck.
Sam, any quick thoughts on this one?
Yeah, I liked this one as well, but I would have probably just passed because it is consumer energy, and that is typically regulated at the national or state level, and therefore is not global from the beginning. And we really need to see Australia, New Zealand found a connection plus global from the very beginning. So it would be an auto pass, but that would be a good thing, I would say, for the founder, because you don't want to waste time on people who are there is zero probability of getting to yes.
Yeah. And do you always go back to reply to
oh yeah, definitely. Yeah. And that's, look, it's a snippet if you're a superhuman person, or a candy. I try to do it as fast as possible so they can move on to the next person.
Yeah, but we're always, I think it's important to go back to them, even if it's with a fast no. And you don't need to go into the detail. Normally, it doesn't fit in our sweet spot or some other very specific reason, but short. So, all right, let's look at this one. Energy your way. So I'll let you guys jump in when you want. This is the problem.
So I don't know if something got lost in the file type conversion to PDF, but I think particularly if you're a consumer startup, it's really important to have a well-designed, you need to demonstrate you've got consumer UI, UX branding sort of chops, and this doesn't look like, the sort of thing that, a consumer is going to flock to. And it'll be super competitive, right? There are already kind of comparison platforms and so on who have, audiences, et cetera, to bring to a problem like this. So I would just invest. Well, there's a thing called Canva, but you could also just invest in graphic design, and it would be well worth it, I think.
Yeah, I just checked with Claire. So this is exactly how Linda sent it to us. So I agree. This does look like an 8-bit ZX Spectrum a little bit. It's not the blocky graphics, and I'm not sure what that even says in the left. EGAP. GN now. What did they say?
I will go to say that I love a clean deck. I love a distraction-free deck.
Is that
when it's just super punchy? So I need it to be distraction-free and just on message.
And does this fit that?
Not bad.
No.
Yeah, it feels like I'm playing a Sierra game from 1992, which is great for me, but not good for the problem that they're trying to solve.
And it's busy. Again, if you've opened you don't have much time, you've read the email, you're like, okay, great, I just want to try and get my head around this, even this slide, you got to try and work out. It's just not clean. It's talking about clean energy, but it's not a clean deck.
I think Sam's point is really, really a good one, in that we're all trying to find signs for attributes of entrepreneurs and ability to push their business forward. And so if it is consumer facing and UX is going to be really important, show that from day one. Show that to the investors, because the investors are always reflecting on the way you interact with me is a very good proxy for how you interact with your customers and also with your staff We're trying to find shortcut ways to understand what you're like.
Yeah. Now, again, I don't. It could be that it's not Linda's fault here, and I'm just checking with chatting with Claire on WhatsApp here. So we did, and it's a message for all founders. Like, if you're sending a PowerPoint file, which is what Linda did, there's always a risk of formatting errors if you don't have the font installed or you've got a different computer. PDF is the safest option. So if you can open a PDF,
Ian,
looks good.
That's a good point. We don't accept PDF. We don't accept anything except PDFs. We don't, because we think cybersecurity is a really big deal. We don't want to open anything apart from PDF. So if someone sends us a PowerPoint, we'll say, please send it to us as a PDF.
Yeah. Yeah.
One thing I did notice on this deck was there were 2 CTOs, which is quite an interesting one. Matta, you'll know better than me. 2 CTOs.
Yeah, I mean, it's interesting. I mean, knowing what I know about the problem domain, virtual power plants, there is a lot of technology, and there's a lot of moving parts to it. I've never seen 2 CTOs in my life. Plenty of 2 CEOs, but not 2 CTOs. Interesting.
An interesting one of their Matt as a co-founder. If you first read the first line, Matt owns and operates a number of energy and technology businesses. Red flag. Why isn't he 100% committed to this? Right? You go, okay.
Yeah, that's a good point.
Is this a part-timer?
I actually reacted differently to that, which is that I thought all the sort of little team bios and stuff sort of really reeked of life's work, and I just thought, wow, these people really know this space, and they've probably really thought about it and can articulate it well, and potentially the many projects, etc., was just because this isn't funded yet, and as soon as they raise a round, they're going to go full time. But it would be a question I'd ask.
The balance between experience and focus is and especially in an early deck, as you said, it's a wedge between investors sometimes. Some people are like, great, you know what you're talking about, versus, are you sure you are focused on this thing? It's an unsolved problem. I would suggest that if you've got a deck and you know who you're sending it to, like, try and understand their position on these things.
Yeah. All right, look, we're almost at time. I mean, any comments on the S slide? I mean, it's very specific, but
pretty small. I mean, if it depends who it's going to. If it's going to a VC that's got institutional backers and is a reasonably large fund, 300,000 is pretty small. I think a lot of us will do early checks if it's something we're really interested in. But I think $200,000 to hire 5 software engineers. I want to know where they're coming from.
Yeah.
Yes.
We often all talk about the $200,000 or $300,000 trap. It's just not enough. I mean, it's enough to make you think that you're off to the races, but as soon as you've done it and you start hiring people, you're suddenly looking at a pretty diminished pile. I mean, if you're going to be raising money, $500,000 really should be the minimum. So I've got a little bit of suspicion of things that are less than that. All right, so we've got the poll that's come up here. So let's nicely critique it. And then we'll jump onto the poll was closed before you submitted your answer, so I didn't get mine in. All right, so this is slightly more popular. There'd be more people take this this meeting from Linda. Anyway, let's not dwell too much on it. Thank you, everyone, for participating. And thank you, Linda, for subjecting yourself to this. Hopefully it was helpful for everyone. So, all right, let's jump on to the next one. Tiller Rides, Julian. It's a revenue-ready e-bike disruptor raising last ground floor capital. I'll let you all read it. In fact, while you're reading it, I'll just read out Scott Coleman in the chat supported my wrong comma comment. So there you go, Meta. It's important.
Shall I go first?
Yeah, sure. Jump in, Sam.
I really loved this email intro. It gave, I think, the right amount of detail, and really when I'm sort of skimming over an email intro like this, I'm looking for, is it a really big market? Have they made some progress that I can get excited about? And does it seem like it could roughly be a fit for Blackbird? And e-bike, a consumer e-bike, that is the sort of thing that we might invest in. We've done consumer hardware before. They've got some traction through pre-sales and are raising to kind of ship the first units. So yeah, I at face value, I would definitely take the intro.
Great. Dean?
I would say I quite like the way that it's been explained. There's quite a lot of detail in there. I'd say for us, the whole adage from VC is hardware is hard, and consumer hardware is hard too. That doesn't mean we wouldn't look at it. I think we'd be intrigued by the ability for someone to have revenue or EOIs already. And so the first thing would be to look, how long has this company been going, how much capital's gone in, but it would certainly prompt some of those questions, which is, that's what you're trying to get from that cold email. So we'd have a look, yeah.
Matt, did you spot the apostrophe in the wrong place that I won't mention?
No, Ian, I didn't. That was your job.
Okay.
I'm a huge e-bike fan. I have an e-bike. I ride it most days. The thing I like about this one is started off with like the why, like healthy people, healthy planet. Like it's Lisa's like, cool, this is what we're doing, and here's how we're gonna, here's how our product's gonna help get there. So it wasn't just like straight into the details. That said, there's some big numbers in here. Big numbers are people who have thought about big numbers is probably what you want when you're talking to a venture person, because their entire business model is based on big numbers. Like you can't do little numbers. I think that anyone who's been able to generate some sort of demand for something, whether it be paying customers or whatever, it's worth a look.
Yeah. All right, let's have a look at the deck. Nice and clear.
So the quick kind of back of the Mac and NASA, I was like, I think they're probably over diluted already. And so I was like, oh, so there's going to be some sort of recap involved with investing in the company.
And let me just jump in. Like, what do you mean? Just can you explain that?
Well, they're raising sort of $3.5 million on a pre-money of $7 million, and this is their third round of capital. So, that's typically I think, at a pre kind of shipping your product stage, you would want founders to have at least over 50% of the company, if not quite a bit more, after the, after capital going in. So this sort of indicates that they've, founders probably below that already. And if you want them to stick around for another 5 to 10 years, they're probably going to need topping up, which actually feeds into the second point, which I think was on the previous slide, around kind of exit strategies. We hate seeing exit strategies on slides. The challenge is to build a really, really big business that's, generating hundreds of millions of dollars of revenue over many decades. We're not interested in people who want to sell and flip in 3 to 5 years. So that was kind of an instant turn off. And then the second thing was sort of Perth to Sydney, and again, like, why can't you sell everywhere in the very beginning?
Also, on that the slide with the exits, one was like a sale to a VC, to a large investor, a VC. I'm like, that was a little bit of a like, I don't think that's how things work. And again, I'm looking for reasons to say yes, which are pulling against the reasons to say no, or the reasons to take the call. And like, the confidently stating the things that or you expect to be true, which are exciting, is great. But stuff like that is all of a sudden it's just another little negative. So unless you're very confident about what you're saying, or you can justify it, I would leave it off.
For me, the start of the pitch deck, actually, I like background images to slides, and then maybe go clear. I think it gives you a nice aesthetic to look at. I don't really understand going straight to the opportunity is actually not the financial opportunity. The opportunity, as Sam said, is to build this massive business that everyone gets excited about. And we have a saying at our place that good companies look after themselves. You don't need to worry about an exit. A good company will have people trying to buy it non-stop. And actually, one of your great skills as an entrepreneur to build value will be saying to those approaches. So don't worry about the exits. You know, that will take care of itself. And to be honest, the first thing of the opportunity is the share price. It's irrelevant. Like, who cares about the share price? We've got no idea what the cap table is. Don't tell us the share price. Tell us about the business. Tell us about your product. Get us excited about that, and then give the financial opportunity at the end.
Yeah. I thought the design was beautiful though. I mean, this does look and feel like it could be a great consumer brand, and it is a premium priced e-bike. And so building a lot of believability on that, I thought.
Yep.
Yeah, the picture of the bike, the actual picture of the Roadster, I thought that was really nicely done. Made me think, hey, I wouldn't mind one of these.
The video is very slick as well. It's well presented.
I actually also really love the sort of Avon lady sort of using your riders as kind of like advocates or ambassadors and sort of that as a go-to-market strategy. I thought that was, you know, it was great that there's some original thinking around that.
Yeah. All right, the slide is up showing, would you take the meeting? Let's fill that in nicely. Timeline. It's always good, I think, to have a timeline.
Timelines are interesting, right? A question for Dean and Sam, like the age of the company, like how much does it influence your decision making?
Quite a lot, I would say. You know, we often get pitch decks when you dig back, started in 2010, revenue ready now. Yeah, it's not to say that it's a no. It might be something that's severe deep tech and taken a lot of work, but the age of the company does count. Yeah.
This slide, I mean, it looks like a carbon copy of the one before. So again, I'm not sure that it would be suggesting that you put the same slide in twice.
I will just sort of touch on that back of the envelope stuff that Sam mentioned. Like every single investor will do that stuff, and will be able to tell you stuff about your company that you don't know. Like you know it, but you haven't alluded to anything. You know, Dean and I are currently unpicking some of this stuff as one of our startups at the moment. Like if you sell too much of your company too early, it'll just lead to really hard conversations later, and could effectively block things. So all I can suggest to entrepreneurs that if you're going to put that stuff up, or if you're early on in your journey, reach out to one of us and ask what the implications of the decisions you're making are, just as a generic statement. And we can help you run through what happens next and why, you know, selling too much of your company will hurt no matter what.
There's no team slide on this one.
Yeah. Ian,
it actually doesn't, sorry.
Yeah.
For this one, that doesn't bother me. Sorry, you go, Dean.
The one thing that I think this deck completely lacks is, sure, the e-bike market's going to be big, but why isn't China just going to mass produce them at a really low price? Like, I'm sure there's a competition slide, but you know, okay, yeah, like I get where you say it's like a stylish urban commuter, the complete transport solution, but stylish bike, you got to say this is why our business will stand up against competition. You know, is there any sort of moat, or are we just going to be competing on price, going to be a niche? How does this be a really big business and be a brand leader?
Yeah. So
I probably feel differently about that, which is that I think if you create an amazing product and a brand that people resonate with and love, that is defensible. And I actually don't mind that there isn't a team slide here, because I think the whole deck is actually the team slide. Like all of the choices around the product, and I thought that product explainer slide was, you know, you could tell they had really thought about what was wrong about existing solutions, who their target customer was, what was important to them, what would be convincing to them in terms of how they would buy. It would be trying it on from another commuter who they, you know, could see themselves in. All of that. I actually found that compelling. Look, the team slide would be nice to have, but I would probably take the meeting without it. And I think, if you're okay with investing in things that don't, have like, lock and throw the key kind of IP protection around it. And then you are in the space of investing in things that don't, have hard and fast moats. And ultimately you just have to believe this team can create an amazing consumer product and brand and following, just like all the big brands that we buy from, today.
I'm sure you all saw the audience results. The audience definitely liked it. Most people would take the email, and 4 out of 5 average roughly is very strong.
Ian, I was just going to say on that team slide thing, this particular slide we're looking at right now, like 2 out of 3 of these people are about investor engagements and stuff like that. And these guys are effectively pre-product. We all know that the relationship between the investor is with the founders, and people in between early is a little bit of a, like, it just creates friction. It just creates a bouncing in between people. And I think everybody needs to be efficient at this stage, and having people who I would hope Alex is actually a full-time employee rather than some outsourced person to sort of, manage the process. So that's just a little bit of an orange flag on the other extreme of the team slide.
Yeah, I definitely agree with that, Matt. And I would say this is maybe a lot of unconscious, now conscious bias coming through. But I'm an ex-Perth girl, so I'm gonna own this and just say that there's maybe been a Perth stockbroker who shifted from selling mining stocks to selling tech stocks. Who's had a bit of influence on this deck and advising, the founder that they need a, investor relations team, and they need to put the share price up front, and they should have an exit strategy, which all probably holds true in the, mining world. But I mean, I don't know, because I don't invest in mines, but I do know VC and I do know startups, and that is not what we want to see. We want to invest in a really compelling founder and team who really understands the customer and the market. We want to speak directly to the founder because we want to invest in them and the company they're going to build over many decades. And so everything else that's in the way of learning about that is unhelpful.
I'm just gonna jump, because the video is pretty interesting. I mean, this is their tillerrides.com invest page. I mean, it's very slick. But
we can't see it in. We've only got the slides up.
Oh, hang on. Let me. Shit. Exit the full screen.
A slick video is certainly something that is really great. You have to make sure you get people there in the first place.
Yeah.
Around the world, urban population.
Still can't see it.
Still can't see it. Oh, okay. Well,
cities are becoming clogged with
cars.
Can you hear it?
I wonder why it's not showing up. Anyway, let's not worry about it.
Ian's forgotten how to zoom. Such an amateur.
I blame the tech. Is that acceptable? What can now? Are the slides back?
Yep.
Slides. Yeah.
Yeah. Right. There you go. We're back.
All right. Well, let's not worry about the video. I would check it out, because it's to Sam's point, it's very investor heavy. It's much less consumer heavy, and it feels like the entire team is kind of focused on landing the investment as as mission number one, rather than the customer journey mission number one. Now that might be unfair, and that's just what they've been asked to focus on, and that's what they're doing.
Just following up from Sam's point, is we're actually seeing increasingly large numbers of advisors presenting really early stage businesses. It's madness.
Yeah, look, that's a good point, Dean. Let's maybe just dig into that a little bit. I mean, if you receive an email from an advisor, a cold email from an advisor, what happens?
It's a big black mark.
Right.
Because it depends. If the business is much later, most of us are trying to invest early and keep going. But if the business is sort of Series B, Series C, and it's a big business, that's fair enough. But seed, Series A, it's about the founder. It's about that person's drive, their understanding of how to build a proper business, to build a team, to bring everybody along with them, is part of exposing them to the investors, to the relationship. So look, some people take advice or mentorship but it's much better to have that behind the scenes if you're going to need that. But generally, it should be a founder working out and solving the problem, that's the game. Solving problems the whole way through, and dealing with investors is one of those things, and not sort of subcontracting that to an advisor. To me, that's a really black mark.
Yeah, just before I ask Sam and Matt that question, just a quick reminder, we've got 10 minutes, so let's get some interactivity going here, just some thoughts on what you saw or any insights, feedback, or questions you've got for the panel. But Sam, that question on cold email from advisors, how do you think about advisors?
I mean, I just have never seen a good cold email from an advisor. I mean, that's the other thing, right? Like, I mean, that's why it's not helpful at this stage more than anything, is because the founders tell it best themselves. Like, invariably the advisor kind of doesn't really understand the technology, or doesn't do a great job of explaining it, or defines the market in market size, using some sort of discounted forecast, like discounted cash flows, kind of just not in a venture sort of way. So I just, I'm not passing because it's from an advisor. I'm passing because it's just not a compelling, intro email. I literally can't think of one that I've received where I've been like, this is definitely us.
Yeah. And Matt, putting that the other way around, I mean, you spend a lot of time advising startups. So when they say, hey, I've found this advisor, what do you say to them?
It's really interesting. I like to think around things like founder energy units. Like, every time, they've only got I've got a finite amount of them on a given day, and a finite amount of them like in themselves, and where they point their energy and what they use it. Like, if they've got something interesting, then they should be able to talk to us and explain the narrative, right? Like, I'm not buying into somebody who's put together a deck with some numbers in it. I'm buying into the narrative of the person and why they're there. Like, to me, the why is way more important than the what and the how. Like, the what and the how are variables that, I want to see some glimmers of that stuff. But the why is almost what every advisor misses, right? Because it's just not them. The why they're there is they're getting paid, and they want to clip the ticket when they close this round. And like, that is a shitty reason to invest, to talk to someone.
Yeah, I mean, the other, maybe it's just because I'm Scottish, but when I see a advisor email, I'm just thinking, you spent $10,000, $20,000, $30,000 of cash on this and the IM, plus maybe a bunch of shares and a bunch of time. There's some things you should and shouldn't subcontract. But that early stage, it's not the advisors. To Dean's point, later stage, it kind of makes sense because you've got the money and the resource and the team to manage it. And it becomes more specialist as you get down the track. But that early stage, you have to do it yourself.
Yep.
Also, yes, it's a huge amount of money to an early stage startup to spend 10 to 30K, but for an advisor to receive 10 to 30K, it doesn't move the needle at all. So they're spending very little time on it. And it shows in the quality of the work in general.
It might be interesting to throw an actual real world example. So a real world example between Dean and I right now is that I am the chairman of a company that I introduced Dean to, and Dean has written as a term sheet. So technically I'm an advisor. However, it's not a paid advisor to come in here and do a job. It's like, there's someone who's very close to the company who understands it, maybe not as well as the founders, but it's getting close to it. And there's a difference, right? It's like, the further away they are from the business, the more likely that the message gets mixed.
Yeah.
Well, that's a good example, actually, of somewhat of an intro, right? Is that, that was a very warm intro. Matt and I have been friends for a long time. I really respect his opinion and sort of tech ability in things. So when he comes to me and says, hey, I've got something I think you might want to look at, I'm like, I'm all ears. Like, I don't even necessarily want to look at the deck. I want to speak to the people, because I'm using Matt as that qualification. So that's what a warm intro or a long-term relationship that someone can give and help with. So
we had some live feedback in the chat from Julian. So Julian from Tiller, again, look, thank you. We didn't call you out, Julian, for putting yourself open to doing this. So really appreciate it. And we do love the journey. And I think if there was a prize for best pitch audience pick, you won that.
Can I just speak to Julian? Hey, so
yeah,
like founder load is such a it is the thing. Like, we talk about this all the time. Sam and I have spoken about this many times around, cool, you've got you know, an infinite number of things to do in a finite number of times and a finite number of, you know, founder energy units, and where you point them at any point in time is your decision. Having people take the load off is like super important, right? That's about how you engage your team and how you surround yourself by people to help. I guess, you know, I think Dean said it right, is if people are going to take the load off, you still need to be front and center. Like, you as the founder need to be front and center, especially when talking to us. Yes, the deck could have been presented by, it could have been prepared by other people, whatever. Just like one email address, if there was one email address that said Julian, the MD and CEO and founder was there, it's like, okay, look, this problem's gone away, right? We're not even thinking about it anymore. Yeah. So it's just really subtle things like that. But founder load, like, and sharing it is like, I tip my hat to you to having someone help you do a deck that looked amazing.
Yeah. All right, let's take a couple of questions. Some questions came in during the registration, so let's take them. So one from Mark Domkins. Hey, Mark, what good books / blogs come to mind with good guidance around brief, remarkable copywriting? Matt, you're normally pretty good on this sort of stuff.
Yeah, look, like, words are important, and fewer are usually better. You know, we've all written things that go too long. I don't have any good blogs. I don't have anything. Bouncing it off people who you admire, who are good writers, who are far away, like who are not, you know, your friends, is probably not a bad idea. The interesting thing about that specifically is, you know, the old adage, if you ask for money, you'll get advice, and if you ask for advice, you get money. If you ask the right person to critique your thing, and you know, there's a high chance that they'll lean in and help you. So, you know, I'm always up to helping people, you know, put things together.
Yeah, Sam,
yeah.
I think there was something else in the chat that in fact, Mark said it as well. The talk you gave with AWS and Innovation Bay earlier this year, the webinar and pitch decks, was one of the highly watched and most highly recommended. So everyone should go and check that out. So any advice on this specific point? Any blogs or advice around it?
I just dumped one in there, which is a really great blog post from First Round. It's called A Founder's Guide to Writing Well. So that's a really great one. But I also think, like, one of the best bits of advice I ever had on writing was to start just with bullet points. Because what goes wrong with writing is actually people don't understand what you're trying to say. You haven't been clear. And you haven't been clear because you've packed too many words around the ideas. And so if you just strip away the words and concentrate on the ideas, which can usually be encapsulated in bullet points, start with bullet points and then form sentences around them, that usually helps a lot, and means that you don't add in a whole bunch of like superfluous kind of words as well. So to your point around like clear writing. As far as generalized advice goes, that's probably all I got.
All right, look, we're at 8:58, so let's maybe just take one more question. I'll throw this to you, Dean. Tom Lipsinski, I think I've got that right. During a pre-seed raise and pre-revenue with an MVP, so, you know, pretty early stage, what metrics, stats, milestones excite VCs in an email?
I think it's very dependent on what the product is. I think traction and growth are cure-alls. You know, if someone can sell something, if someone can prove that someone wants their product, even better if people are grabbing it out of their hands. Listen, I need to raise money because I need to keep up. People really want this from me, and I need to invest in more engineers. I need to process my sales funnel. That makes a huge difference. I think there's the order hierarchy of people, how people look at things. Obviously, you know, is it an area they're interested in? Do they like the team? But in the end, it's about traction. It's about growth. So if you can point, even at the very earliest stages, that someone wants your product, and this is how that's being evidenced, and that may be sales, it may be different ways of proving that, especially at pre-seed. But you need to show that people want what you're trying to deliver.
Yeah, I would say it doesn't matter what the type of product is. It's just customer love, right? If you can prove to me that, even I'd rather see you with a very small number of people that would be, you know, mortified if you took this thing off them, than a bunch of traction. You know, the problem is that, you know, one of my generic sayings is, if you're going to raise money, you need to have an awesome story and no numbers, or an awesome story and awesome numbers, and anything in between is going to be a world of pain. So like in those early days, the awesome story and no numbers is kind of what you're looking for. I mean, you need to get the numbers, but you're going to go through this awkward bit where the numbers probably aren't great after a little while as well. So you just need to balance those things up.
All right, look, we're at 9 o'clock. I'm getting called because I've got another meeting, and I'm sure we all do. And I've forgotten that I need to do a quick wrap up. So I'm going to do a quick thank you to the three of you, Dean, Sam, Matt. Great to hang out again. We should do in person next time. In fact, Matt, we might be seeing you in Sydney soon.
Come on, try and Tasman bubble.
Yeah, Tasman bubble, here it comes. All right, and thanks to the audience, but let me just do a really quick wrap up, if I can remember how to work Zoom. I'd forgotten how to wrap things up, but we've got an upcoming event. So we've always done our end of year event, and this we're very excited about because first of all, it's an amazing founder, Kate Morris. So, you know, Innovation Bay, we talk about from idea to IPO. She's lived the dream and she's done it. So she has listed Adore Beauty. It's a $600 million thereabouts business. She listed it on the ASX and rang the bell virtually. So we've teamed up with our friends at ASX, and Kate is going to be there to ring the bell physically and then come downstairs into the auditorium with only 50 of us. So there's still some social distancing regulations. So, but that is on the 8th of December. So I think we'll be sending an email out on that today. So keep your eye on the inbox and we hope to see you in person. We put out a news special this week. So we had Amanda Price, James Riley, and Vuki Vujanosevic from Sling and Stone, which was pretty amazing. And then second time on the show, we had Pat Llewellyn from 99 Designs talking about his exit to Vistaprint. So that was a good episode also. Again, big thank you. Our sponsors, AWS, IAG, Firemark Ventures, KPMG, and Macquarie Bank. I think that is it. I should go and jump onto my next meeting. I'm sure we've all got another fun-packed day of Zoom calls, so let's get on with it. But thanks, everyone. We'll see you next time.
Everyone.